the daily edition of Market Wrap with Mo Ansari.
Brought to you by Compac Asset Management,
Providing proactive portfolio management and world-class wealth management solutions.
Hello, everyone, and welcome to Market Wrap. I'm Mo Ansari, president of Compac Asset Management, and you're tuned in as you've been doing so for 2 decades now. And as always, you can call in, and I will be more than happy to share with you my 33 years of trading experience. So now let's talk to somebody who comes and gives us a quarterly update, and they have a new update that has just come out. That is Natalie Dempster. She's the investment research manager at the World Gold Council in New York. Ms. Dempster, welcome back to Market Wrap.
Thank you, Mo.
It's always wonderful to have you here. Let's talk a little bit about gold. It's hit record highs. What is your take on the recent price movement in the gold market?
It has. It's been an incredible few months for gold again. We hit a record in dollar terms yesterday, but importantly also in euro terms, Mo. When gold can rally at the same time that the dollar's rallying, it really tells you something about the underlying strength of gold demand. That number that you mentioned, the $1,240 an ounce, also to put that in perspective, that's an increase of 13% so far this year.
Why do you think
the
that is?
The driving force this week has clearly been investment inflows. We're hearing reports of very strong buying of gold coins. Indeed, the Austrian Mint in Europe yesterday described buying over the past 2 to 3 weeks as frantic. Inflows into gold ETFs have also been very strong. I think the key driving force has been growing concerns over Europe's fiscal positions and fears that a country such as Greece might have an outright default on its government bonds. I expect concerns over sovereign debt will continue to dominate market sentiment for some time and will continue to push investors into gold. We saw, of course, the ECB announcing this $1 trillion rescue package, and that prevented what was looking like an imminent default on the part of Greece. But this has been at the expense of raising serious questions now about the central bank's independence.
One of the things that I do want to talk about, but Natalie, is gold becoming really a currency rather than a commodity where people are looking at it and saying, look, we had these reserves of currency that we kept. We had a certain amount in dollars. We were getting nervous with the dollar, so they were moving to the euro. And all of a sudden now the euro is not as strong. So are people using gold as one of the currencies, not just as a commodity?
Yeah, absolutely. I mean, gold has always been part currency, part commodity. At the moment, the buying is being driven exactly by the motivations that you mentioned, Mo. There's a lot of concern about how the buying of these government bonds will be financed. Might this eventually be monetized? If it is, it would obviously undermine the role of the euro as a store of value. So investors are looking elsewhere for a currency that cannot be debased by policymakers. Gold is, ultimately, it's the only universally accepted currency whose supply can't suddenly be increased by the actions of central banks or by governments. The equivalent for gold would be new mine production, but that has been more or less flat over the past 10 years. So it's really basic economics. There's fears about the supply of one currency increasing. That's pushing down the price. The supply of gold has been fairly constant, and that's giving investors confidence in gold's role as a store of value.
Do you think also we're seeing a lot of uncertainty in these markets, Natalie? In the currency markets, we're looking at not just the euro, but the sterling also. They have a hung parliament. They've got a coalition government. Nobody knows exactly what is going to happen in Britain. And so everybody's looking towards Europe and saying there's a lot of problems. So is it also, and we're seeing a tremendous amount of volatility in the equity markets, in the stock markets, are people also looking at the gold market as another alternative to the equity markets?
Yeah, I mean, you're right. This is not just a Eurozone problem. The UK has its own issues. Its own budget deficit is very high. And, of course, we also have ultra-loose monetary and fiscal policy in the US. So it's a case of investors really not wanting to hold any fiat currency. And, as I say, it comes back to to the fundamentals, gold being the only currency that you cannot print more of.
Natalie, one question that I always like to ask you, and I don't know if I'll get an answer or not, but are we at a top in the gold market, or do you see higher prices coming in the gold market further down the road?
Well, I mean, we don't forecast the price, Mo, but what I will say is that it looks very unlikely that there is going to be any near-term resolution to the fiscal crisis. It's difficult to see how this is going to be done because implementing austerity measures are clearly extremely tough in this type of economic environment. At the same time, the weak growth outlook means that any recovery in tax revenues is going to be incredibly slow. So, the concerns that investors have about the fiscal position are medium-term concerns. The concerns that they have about monetization of the debt leading to inflation in the future are medium-term concerns. These are not about to go away in the short term. So I think that will keep investment demand for gold strong.
Natalie, many investors are chomping at the bit to get on the gold bandwagon. Is this a bad idea to get in at this time as it is so high? Should they wait for pullback? Should they wait for corrections? Or should they just jump in and say, okay, here we go. We're headed towards, we're at a high, but we could be even headed higher?
Well, I mean, with respect to the timing, I think you just need to consider your view of what is going to go on with the global economy, and it really comes back to the points on resolving the fiscal position that I've just made, is that I don't see a near-term resolution to that, which I think will continue to keep investment demand for gold strong.
Natalie, one question I just really stuck in my mind last time we chatted a couple of months ago. You were talking about how some of the countries, especially the emerging markets, were starting to expand their gold reserves, and they have very small gold reserves compared to some of the European and the Western countries. And you mentioned a number that they were at 2%, and if they went to 4%, which should still be a very small part of their national reserves, it would just increase the demand for gold dramatically. Are you seeing any of that? And what were those numbers, if you could sort of bring our listeners up to date on those?
Yeah, I think the other fundamental shift that we have seen in the gold market over the past year, rather than over the past few weeks, has been an evolution in central banks' attitudes towards gold. After being large sellers of gold for the past 2 decades, central banks turned net buyers of gold in the second quarter of last year. That reflected 2 factors. Firstly, it was a substantial slowdown in sales by the European central banks to really now negligible levels. And secondly, it was the emergence of new buyers. Russia and China have been accumulating gold over the past few years. More recently, India, Sri Lanka, and Mauritius took large positions in gold. However, they bought gold directly from the IMF, so net that didn't have any impact on official sector balances. But yes, there has been a gradual accumulation of gold by Asian and emerging market country central banks.
So they're also moving towards gold as a diversifier of their resources and of their reserves that they're holding. They're moving towards gold.
That's correct.
Natalie, you are the Gold Investment Digest, and you're the World Gold Council. Do you at all look at silver and platinum also?
We're just gold.
Just gold, that's it. Yeah. Well, that's what a lot of people look at as a currency. They talk to me, and some people call me and say, silver is good, but it's not. It's more of an industrial metal, not like gold, which is an industrial metal. It's a commodity, but at the same time, people are looking at it more and more as a currency. Natalie, again, I want to thank you for being with us today on Market Wrap, sharing your thoughts with us, and giving us an idea in a quarterly update on where the gold market is and where it could be headed. Thank you again for being with us.
Thank you.
That's Natalie Dempster, Investment Research Manager at the World Gold Council in New York.